everyone. I'm Kate. I'm a financial technology advisor here at Hyperbots. Today, I'm thrilled to have John Silverstein with me. Hey, John, how are you doing today?
Good. Thanks for having me.
Thanks for joining us. So, a little bit about John. He is the Vice President of Finance Process and Accounting at XR Extreme Reach. Today, we will be discussing the pros and cons of various different tax dictionaries. So, let's jump right in. So, coming to the first question, how do sales and use tax dictionaries benefit organizations, especially those operating across multiple jurisdictions?
Yeah, so tax dictionaries are critical for any business that's particularly operating across the different jurisdictions, particularly in the United States, where we have specific codes by zip code and even product categories are different. So if you're in one jurisdiction and selling both services and products or different types of products, the tax on those products or services could be different, or there may even be no tax on some of those items. For businesses operating across multiple states, you have unique tax laws. There might be invaluable. This is invaluable for ensuring compliance and avoiding errors. So it's really hard without a tax dictionary to avoid errors because you would be manually doing it or looking it up as you do sales and things. So it's very time intensive. And to be compliant, you really don't know because sometimes the areas on the tax are also quite gray, whether it's taxable or not taxable, particularly when it comes to things like SaaS. In certain states, there's been new rulings even this year where the law wasn't changed, but the court has ruled differently on the tax law on saying that SaaS is a service versus not a service and things like that, or vice versa. So those things, if they change in the state or there's different cases, in order to maintain your compliance and to stay up to date, you need to make sure that you are up to date with a tax dictionary. There's also another example here. For instance, a company selling both children's clothing and adult clothing might need to apply different tax rules if one is tax exempt in certain states while the other is not. A tax dictionary automates these distinctions and it helps reduce the manual errors of trying to make the process much more efficient. Even though those things are very much alike, the tax sometimes, particularly with clothing, it gets pretty interesting since I was in that space at one point too, is sometimes it's based on the value of that clothing, on whether it's taxed or not, because it's considered luxury item versus not luxury. So there's things like that that you really understanding the laws by every state, which is impossible. You really need these tax dictionaries set up.
So, moving on, can you describe some popular vendors of sales and use tax dictionaries and how they differ in their offerings?
Yeah, so there's several regarded vendors with tax dictionaries, and even in your ERPs and things, there are either connectors or apps, or sometimes they have them themselves where they're tax dictionaries, or they're pulling those from some of these vendors alike. So, like Avalara is AvaTax provides real-time tax updates that has over 12,000 tax codes that cover both location and product specific taxability rules. Vertex is another popular choice, known for its support of multi-state and international operations. There's OneSource by Thomson Reuters. It's ideal for business needing global compliance solutions. And then lastly, TaxJar. It's a simpler and often more affordable. And yeah, I see some of the smaller companies too, sometimes looking up their free service and stuff like that. But that, again, if you're doing a lot of business, it's not very scalable. So you need to subscribe to one of the services and set up the actual dictionaries. So each vendor, it's a little bit different on the detail and customization and what you need from a setup standpoint. For instance, a business that only operates in a few states, TaxJar might be sufficient because you're selling very simple. It's products and you're not mixed between different types of services and products. That can be a lot easier where a tax jar might make sense. If you get a multinational company and you're across all the states and everything and different municipalities and all that stuff, then you need to be something with more comprehensive capabilities like the Avalara or Vertex. You also need to make sure the thing that I've run into in the past is really, even with Avalara and Vertex, is your item list and code has to be clean and you have to categorize your items correctly or make sure that you're using a proper list to do that because it can also get you, even if you have the tax dictionary set up, if you have your products categorized wrong or items in your NetSuite or whatever ERP you're using incorrect, it's going to apply the incorrect tax based on the wrong tax dictionary.
That was really insightful. So, how important is real time updating in these tax dictionaries? And what are some of the risks if this isn't maintained?
Yeah, so the real-time updating of tax dictionaries is critical because it does change. It's not a something that's been set in place 50 years ago and you never have to look at it again. Unfortunately, things like I said earlier, even a case that goes through where a company gets sued in a specific state or something like that over tax, sales and use tax, then you may now have to comply too because you're next on the list, right? So you got to make sure that you're up to date on what's going on with decisions and how they're interpreting the law. So it is critical that you stay up to date because of the changes. The rates also change. So if you just set, like in QuickBooks, you can set a tax rate on a product and leave it there, but it's stagnant. But if that rate changes next year, we're about to head into 2025. If you don't know that the rate is going up to a different percentage and things, you're going to be miscalculating the tax rates. Also, a local jurisdiction in like Colorado, if it changes its rate for taxable services, a business would need to update that immediately to the correct rate. Avalara and Vertex, they would keep that up to date and give you a real-time update and help you stay compliant without having to manually track the changes. And missing updates can lead to financial and reputational risks. I've seen this as well, where major vendors aren't collecting sales tax and you're a reseller, and then all of a sudden they're like they had an audit or something and they had to go in and change their tax rule. All of a sudden that impact is for the resellers, and then all the customers and everybody all of a sudden got that increase, and it could be pretty substantial. If you're selling a service that might be over $100,000, that's a $10,000 increase, a 10% increase in some states. So you have to be very careful because it's a reputation, it's also the customers, and there's also planning around the actual price that you pay, including taxes.
I couldn't agree with you more, John, on this. So, moving on, what unique challenges do mid sized businesses face when using these sales and use tax dictionaries?
Yeah, the mid-sized businesses often face budget and resource constraints, and it's if you think you're simpler and you don't, they can be pretty expensive, Avalara and Vertex, depending on how many items and transactions and things that you have to, and how many states, and if you're going for full service or not too, where they're doing the filings for you. So it's there's the licenses fees, which can be prohibitive, and then it may not make sense if you're just a mid-sized business and you don't do a lot of business in a specific state or jurisdiction. So that's where it's hard to sometimes justify as a mid-size. As a large company, it doesn't really make a difference, and it's not going to cost you as a percentage of sales and stuff like that to go in. It's just going to keep you compliant and make you have less labor on it. So that middle ground of where you put labor or head count to manage versus purchasing a dictionary, making sure that you're up to date with Avalara or something like that is the challenge, I think, on the mid-sized business. Having setting up Vertex's address level jurisdiction data in an ERP system, you also have the implementation, technical expertise. Sometimes it doesn't integrate exactly because you have that data. Again, things like that may happen, or you need them to set up and you don't have the consultant or something like that for a setup. So those are the big things. Errors as well in that item setup. So things go back to Avalara is only as good as your data in your ERP or item list. So that can be the challenge for those solutions on and its interpretation of what those items really are.
Could you explain how sales and use tax dictionaries handle product specific taxability and why this is significant for businesses with diverse product offerings?
Yeah, I kind of went into a little bit earlier, but the product specific taxability, it ensures that items within these different categories that I've alluded to are taxed accurately based on those unique regulations. So like it could be even the cost of that product. So in some cases, you may want to sell a product for $99 versus $100 just because it changes the tax implications in the US. So the other things where you can get different tax treatment is grocery items might be exempt from tax in certain states, and it may not be all grocery items. Some things are considered luxury, and some things have added tax. Like if you're selling soda in some cities, even your tax could be different because of the health tax they put on some of these items and things like that. So it's critical, again, that you understand the compliance there. A sales and use tax dictionary will differentiate these. It applies the correct tax rule based on the product type. Vertex and Avalara, for instance, they'll have both allow the item specific configuration. So a business selling both non-taxable groceries and taxable prepared meals can easily manage these distinctions. This is especially helpful like for retail or e-commerce companies with the wide-ranging product catalogs. And sometimes you're selling into a state versus the other pieces is if the tax nexus, how that's set up is it's based on the delivery location and all that as well.
Totally agree. Moving on, what are some cost-effective options for mid-sized businesses that may find the pricing of robust tax dictionaries prohibitive?
The best answer for this is to understand how much effort you're really doing on it today, to understand the ROI in potentially implementing an Avalara things, because you'll find that you might have your controller in a mid-sized business or a smaller business spending 20-30% of the controller's time on sales tax. That may not make sense. And then you're also hiring maybe an accounts payable clerk and some other people that you may not have needed to hire. So it's critical to understand, number one, is what you're really spending on sales tax today. And can we relieve that and get rid of that 20% or 30% or whatever the hours are, doing filings and doing lookups and things like that on the different goods you're selling. And every time you get a new jurisdiction on the setup and all that stuff. So you can't understand the ROI until you understand what you're already spending on it. So that's number one. Number two is you may want to initially use something like TaxJar or something like that to just get some integrations and to get some data. You could use a tax advisor too, might have some suggestions. And if you're in just standard jurisdictions and not that many, you could be set up and you could set up the tax and just make sure that you're checking it on a manual basis regularly, or you're looking up and getting alerts for any changes in those yourself versus having to use the software. Again, you can use those cheaper tools and things like TaxJar, and you can do some manual processes and lookups. So it's available. There's alternatives, but understand what you're really spending on it. And it may be wise, because I've seen even many of the medium-sized businesses and things where it could be justified to use an Avalara or something like that. And then you're not dealing with fines and things, and it's easier on the audit side if you do get questions on a sales and use tax audit. So you have to look at the risk and look at what you're trying to do and where your expansion and growth is expected as well, because that would all change the amount of effort you're going to have to put into it.
So moving on to the next question, how do these tax dictionaries handle use tax? And is this an area where mid-sized businesses face specific challenges?
Use tax applies to items bought tax-free, but used in a taxable manner, requires precise tracking and configuration. So many tax dictionaries focus more on the sales tax than the use tax, which can leave gaps for mid-sized businesses that need to do use tax compliance. For instance, a business might purchase office supplies tax-free, but then owe use tax when using them internally because they're not reselling and things like that. So that's a little bit different, where you need to, again, it complicates the tax law in the US at least. These setups are, again, Vertex and Avalara can help with that. Features on use tax, but require custom configurations and resources to manage. Without the right resources, the mid-sized businesses may face challenges in setting up and tracking these taxes accurately as well.
So coming to the last question for today, what role can AI and automation play in simplifying sales and use tax compliance for mid-sized businesses using these dictionaries?
Yeah, I think a number of things are going to happen as time goes on. I think the being compliant and the availability of sales and use tax tools, there'll be other players that are using the AI components that aren't just Avalara, Vertex, some of your traditional players. I also think that gives opportunity for even your ERPs and things like that. A lot of companies don't want to say that they use even Avalara. If you call them up and you have a question about should we pay sales tax or not, they don't give tax advice. They tell you to talk to a tax accountant to go through it. So getting that advice and at least the initial thought and some guidance from AI generated can help. I also think in automating some of those responses, and you might have better access to what a CPA or somebody else might say. And that also enables them to reach out to, I think, more people and more companies and have other subscriptions to be up to date. Monitoring and flagging these as well can help. Hyperbots, for instance, too, that uses Avalara and other dictionaries can actually look at multiple dictionaries and things like that and understand what the differences are and how making sure that you're compliant. So using AI to streamline the sales tax verification too on the vendor side. So you're going to see that your customers are also verifying should they pay sales tax or not. So I think you're going to get a lot more questions as AI can start to trigger. If they're using hyperbots, they might trigger your customer actually to say, hey, we're tax exempt when you are charging sales tax for the entire time, or we're not supposed to be taxed in this jurisdiction, or those types of things. So it's going to bring up some questions and things, but it's going to ultimately bring, I think, a much higher level of compliance to the industry. And it's also the availability and checks and balances on sales and use tax. I think we're all going to be better and easier and more efficient on this because you'll be able to get, like, for instance, to a little more details on the hyperbots is that it can automatically extract the sources and destinations from the invoices and POs versus which is sometimes not compliant with what your addresses are stored in your ERP. So getting those in line and things too can help you with sales and use tax and give you decisions on where you should ship and use things and stuff like that, and even set up, to make some decisions around that. Classified line item tax categories and use the most appropriate tax dictionary to verify the tax automatically. You may want to integrate with these dictionaries into their ERPs and things like that. So you'll get a lot, again, it goes down to compliance speed and, I think it's ultimately going to save us money and time. Additionally, it can recognize patterns in tax application errors and suggest corrections. So AI can, help you with on that end too, to minimize those risks that we talked about earlier, improving accuracy. It's also can help like the mid-sized business to maintain compliance without like constantly manual oversight, like checking rates and exporting data and then doing lookups versus these dictionaries and things like that. And both when you're purchasing items and when you're selling items, you can be a lot more compliant.
That was really insightful. Thank you so much, John, today for joining us. We have reached almost the end of our discussion today. Thank you so much for sharing your insights on the pros and cons of different tax dictionaries. To our listeners, whether you are an accountant, a tax attorney, or just someone with a passion for decoding tax jargon, we hope this discussion has given you valuable food for thought. Remember, the key is finding the right balance between comprehensiveness, clarity, and usability for your unique needs. Thanks for tuning in, and a big thanks again to John for joining us today.